The GST is a path-breaking reform. And the other controversial thing about GST has always been the ITC.
Marble, granite, the GST coming down, one might see an impact when they're doing.
An impact on the consumer price. That's a little bit of a grey area. No, that depends upon where you are. Because in Bombay, when the prices are say 30,000, 40,000, 50,000.
For the price sensitive ones, the builders might use this as a good time to, like they said, introduce it as a cost cut, a better deal, a better rate, better price, and push their project.
Welcome back to another episode of the News Roundup with Prop News Time. Here we sit down with industry experts to discuss the latest events and news that impact the real estate sector. With me today is Mr. Balaji Rao and Mr. Abhay Rao. Welcome to the show.
Thank you.
Thanks.
Today I'd like to talk to you all about the GST 2.0 reforms. The goods and services tax has been one of the most significant economic reforms we've seen in the last decade. With the new reforms recently announced, I'd like to talk about how it's going to impact the real estate sector. So I'd like to begin with construction costs. We have seen the GST rates reduced for certain construction materials like cement and glass. It's come down from 28 to 18%. While a couple of others have remained same, like your labor GST charged on labor contracts, on works contracts remain the same. How do you see these changes impacting overall construction costs and project viability?
You see, first and foremost, we have to understand that GST is a path-breaking reform because it simplifies the erstwhile tax structures which were there under sales, works contracts, service tax.
Yes.
Now it is rationalizing the structure. So they're
Right.
trying to bring in a fewer slab rates, correct?
Yes.
So in the fewer slab rates, I think the good point for real estate is except for certain luxury items, most of the items which go into regular housing, they have come down or they
Right.
remain the same.
Yes.
So the first reaction is it cannot have a negative impact because nothing has really gone up.
Right.
In some cases, as you rightly pointed out, cement, steel, all of them are a little bit lower.
Yeah.
And in certain cases like marble also, it has come down. Labor contract, it has not come down. So there is absolutely a positive impact for
Right.
that. Now, naturally, the industry as industry sources, we would have loved to see GST come down even on under construction properties,
Yes.
which is 5% for non-affordable housing. And that has not happened. But that 5 is the lowest rate. So I don't see it where it can come down. And the other controversial thing about GST has always been the ITC,
Right.
the input tax credit, whether we take it or we don't take it. And as you know, for some time, there was this regime where you could choose whether you
Yes.
were going to take ITC and then charge 12% to a customer or not take ITC and charge 5%. Today is more or less standardized as 5%
Yes.
without charging ITC.
Yeah.
So all these, if you put together and whatever has been the rationalization, I think it has been a welcome change. I think it is going to bode only positively for the sector.
Right.
But what you've asked is a little bit further than that. If you're asking me, will it have an impact on the consumer price? That's a little bit of a gray area, you understand? Because typically construction costs should not be, and I'm talking about an average place where the land price is not very heavy. Typically construction costs are generally about 40%, not
Okay.
more. Okay. Now in the 40%, the materials that have been impacted by GST might only be 20-30%.
Right.
So that makes it straight away 10 to 12% of the overall cost.
Right.
In that you have said that, okay, I'm reducing some places 28 to 18. You've brought in 10%.
Yes.
So by mathematical calculation, technically maybe 2% should be impacted.
Right.
Now, whether that 2 to 3% impact will be passed on to a customer, we don't know. The government actually wishes that everybody does so.
Yes.
So maybe it will be done in many cases. In some cases, it might be offset if somebody is using certain luxury items where it has actually gone up.
Right.
And in commercial, again, there has been a lot of controversy. We'll come to that later. But in residential, to sum up, I would say technically prices should come down by a few percentage points,
Right.
not to a great extent. But is it a positive step towards rationalization of tax rates and simplification of the process? I agree it is. There's no doubt about that.
So yeah, I think these new GST reforms are a really good move. We're kind of, in the long run, we are making it a lot easier for the builders and everyone to plan their construction costs and all accordingly. Plus, there's a lot less confusion with fewer brackets involved. So to that extent, also it's a good move. On a personal note, one would feel that yes, since with certain items like cement and marble, granite, the GST coming down, one might see an impact when they're doing self-construction or any renovations or anything in their house. You might see a 25-30 rupees
Yeah.
reduction in cement cost per kg. You'll see a slight reduction in your marble, granite, stones and stuff like that. But as Dad was saying, and from what we've understood around the industry as well, people have reacted very positively and are happy with the news. They don't think the prices of property per se is going to come down that much because of this. At best, one feels a 1.5% decrease is the maximum that one might see, thanks
Right.
to the new GST slabs and rates. But that is the maximum one would see in terms of a pricing impact.
Right.
This seems to be more of an overall restructuring that they are doing to impact the industry on the long run, and make
Right.
things go smoother in the long run.
So what we're saying is that the cost of construction is a small component of the overall price that's paid by the buyer. And so whether it's really going to move the needle, time will tell.
No, that depends upon where you are. Because in Bombay, when the prices are, say, 30,000, 40,000, 50,000, the cost of construction might only be 10-20%.
Correct. Yeah.
In another place where the price is maybe 10,000, the cost of construction might be 30-40%.
Right.
So that's why it will move, but it is not a large distance because predominantly the price of real estate is high in most places because of the price of land.
Right.
You understand?
Yes.
And so land is expensive, and then now labor is slowly picking up also because labor has become expensive.
Yes.
It's scarce. So all these are also cost components, and unless those prices are rationalized, which is not easy, I don't see the end price coming down in any big fashion.
Right. These reforms have created a bit of a buzz. There is positivity. So while, say, like you mentioned, there is no reduction in GST on under construction properties. However, do you see it positively impacting overall buyer sentiment?
I do think so, because you see what happens whenever there's a buzz that you'll have more money in your pocket because your costs are coming down, there's more saving, then naturally you feel a bit more richer. You feel a bit more adventurous and can take a bit more risk.
Right.
You have more disposable income. So all these are going to add as factors towards creating a sort of a positive tailwind for the sector. You understand? Because it will be seen as if people will think that, okay, prices are all over down. Some durables are also down. Cars are coming down.
Right.
I'll have more income. So now is the time for me to jump and take a good loan and buy a house.
Right.
So will it act as a tailwind? Will it act as a positive factor? Yes, indeed.
Okay. Any reason you see why a builder may not pass on this cost benefit to the buyer?
See, a builder is completely goes as per market forces. So if he sees a huge demand for his project for any reason, he is not going to be very inclined to pass on the benefit, what is 2%, 3% or whatever it is.
Right.
But if he's anyway got to push his product, he actually might use it to reduce it by 10% also. To say, I'm now reducing it because, the input costs have come down. Rather than saying, I'm reducing it desperately to get a buyer.
It's a good way to
So
market
it's a good
it.
way to market it. So it'll depend very individually from builder to builder, from project to project. But will they take advantage of it? Yes, I think real estate developers, by and large, are a very intelligent lot and they know how to market. So they will take advantage of it and give it a push.
especially leading up to the festive season that's coming. This
Right.
is just the kind of impetus they needed to get moving and convince people that, hey, look at real estate again. We are back with good offers, good deals, lower costs, more regulations,
Yeah.
more timelines, more streamlined than ever before, kind of a thing. So yes, it's a positive sentiment, no doubt, and they will try to ride that wave. Now, in some cases, like I said, there might be a slight price reduction that is seen, but it all depends on the level, the project itself. You know, the end buyer
Right.
at what stage are they buying a house. If you're buying a property that is 10 CR plus, I don't see too many of those prices coming down that much. But
Of
the
course,
ones
yeah.
in the 2 to 5 CR range might see a slight difference in pricing, you know, because those are
Right.
more price sensitive. The less price sensitive markets might not be affected, but the price sensitive ones, the builders might use this as a good time to, like they said, introduce it as a uh, cost cut, a better deal, a better rate, better price, and push their projects through.
The next topic I want to talk about is the Indian Railways decision to lease over 273 acres of land across Mumbai. They're doing this through the Rail Land Development Authority. They have multiple land parcels spread across the city. The two plots that they recently put out have been in Mahalakshmi and Bandra, and these are said to have close to 6,000 crores in development potential. They're doing this as part of a larger national monetization pipeline. I'd like to first talk about the broader plan of monetizing unused land parcels. What are your thoughts on this action?
See, just as we discussed before this, the whole concept of pricing of materials. But the biggest component of pricing is land. And why is land expensive? Land is expensive because of the scarcity of land in the developed pockets. You can get land in the interiors, but you want it in the developed infrastructured areas, correct? And land is expensive.
Yeah.
The government created an NMP, National Monetization Program, in order to unlock such idle assets,
Right.
whether it's in factories, whether it is in government departments, government undertakings. So yes, the railways have a lot of surplus land, okay? And that surplus land, they are slowly trying to figure out the parcels of those surplus land, especially in areas where the demand is high, because that's easy to sell.
Right.
Okay, so they are taking it out, cleaning it up, and saying, "This is the land I have. We would like to auction it." And where does it help? It's a win-win. The railways need money for their own expansion and capex plans, correct?
Right.
And so they're always on budgetary support. So it brings down the budgetary support. Whereas the market needs more and more supply.
Right.
Because if you want to hold the price down, or you want to stabilize the price, you need supply to match the demand. Correct? So this is one way we can ensure that the supply of land is steady and constant.
Right.
You understand? And quite a few undertakings have it. Port authorities have it, defense
Yes.
people have it. Wherever people find it surplus without compromising on a security or integrity or anything, I think we should release that land.
Okay.
You know, and we should release it, the land. The better thing, of course, is to release it in a pooled manner so that it can be urban land.
Right.
If suppose railways have contiguous pieces of land and they can release 500 acres, then it can be better planned. Maybe 1/3 will go for the weaker sections, 1/3 will go for common amenities, and 1/3 in the free market sale.
Right.
So it can be planned better. But land has to be released quickly because that's the only way you'll be able to hold on prices. Otherwise, the prices are going to keep galloping away, because if this country is on a trajectory to become one of the largest economies and we're
Right.
going to move up the ladder, then naturally the urbanization pace will only increase. And there will be more and more demand for housing,
Right.
you know, besides commercial and industrial and retail and everything. With such a demand coming up, it's like a wave. Where is the supply?
Right.
It can't be in bits and pieces and pockets of some slum redevelopment here, something there. It has to be released, that land. And
Okay.
that's why I think it's a very good, positive step from the railways to release that surplus land they have.
Right. But say these two land parcels that we're talking about, the auction is open to everybody. There's no rider per se, at least the information we have as of today. There doesn't seem to be a rider. So they're releasing it at market rates.
Correct.
Should it be subsidized?
Not really, because you see, when it is in a developed location, why should it be subsidized?
Okay.
You understand? Where it is in the other locations, automatically the price might be lower, or if it is a larger tract of land, they can say that, we'll keep part of it, we'll give it to the government or to a national body to encourage urban rejuvenation, sort of a thing.
Right.
But these pieces of land in Mahalakshmi and Bandra, subsidizing that will be not really relevant.
Okay.
But see, this is part actually of the larger plan that the Indian Railways have. The railway has a lot of land. They
Right.
have overall in this country close to 4,90,000 to 90,000 hectares of land,
Right. Yeah.
and the usage is barely 1.8%.
Right.
So that means majority of the land is not being utilized. And the plan is to start utilizing this.
Right.
And they want to do this not just by selling so much, but more by leasing.
Yes.
So that you still have control of the land, but you can also monetize it and use that money then to keep improving the railway services.
Yes.
The plan is for the railway is ideally that by 2030 they want to reduce their dependency on freight income.
Okay.
Freight income is right now the highest component of what the railways earn. They want to reduce that dependency on only freight income, and this is one of the ways that has been suggested. And I guess Mumbai will be one of the first test cases for this to see if it works or not.
Right.
And based on the numbers that one is expecting, it should generate plenty of income for them, which they will then use to keep improving the railway services. That was the plan from the railways side at least. So to that extent, this is the starting of the plan that we are seeing right now.
Yeah, that's a good point. Yeah.
If they do it right, do you see this becoming a framework for other civic bodies within the state and other states to follow?
Absolutely, because I think all state and central undertakings are realizing if they have surplus land or idle asset, sitting on it is criminal, literally.
Right.
Because you see, there's so much pressure on us to finance infrastructure.
Right.
There's so much pressure on the budget to finance the capex plans for most of these companies or undertakings. So how do you do that? You can only do that if you can monetize those idle assets. And you're monetizing them in the right way, because you can give it at the market price as we are doing it here. And you're also releasing the pressure, as I said, on the land supply.
Right.
And if you're sitting on land, why sit on it if you don't really need it? If you need it, it's a different issue.
Right.
But as he's rightly saying, if he doesn't need it and they may be looking at other sources of income, or they're looking at how to maybe enhance passenger facilities, then why the hell do you need to sit on it?
All right.
So initially, actually, one was thinking most of the land would only go towards, say, commercial and warehousing and stuff that is more related to railways.
Yes.
But now they're realizing it can literally, why should they dictate what is it used for,
Right.
It's once it's leased out, let a person use it however they want.
Right.
Which
No,
is,
anyway, there, Abhay, what happens is it will be going as per the zoning also.
correct.
So I
Right.
don't think they will violate the zoning regulations. So
True, but they were not as rigid as initially the
Yeah,
plan
they
was
might
to be a
not-
lot more rigid. Now that
they might not
rigidity
be so
seems to
rigid,
have.
yeah.
They have given out some portions of their land in Matunga and Mahim for the Dharavi redevelopment, for the rehabilitation of
Correct. To help them out.
to help them
Yes.
out, yes, of the tenants.
Correct.
So they are getting involved in housing to some extent as well. Next, I'd like to talk about the National Housing Bank's RESIDEX. It tracks 50 cities. What it has said is that out of 50 cities, 45 cities have shown an annual increase in price. Overall, we've seen an increase in 5.7% year on year. However, this growth has moderated a bit. So it's, say, we saw 5.5% this year compared to last year. The levels were about 6.6%. So first, generally speaking, why do you feel that we've had a bit of a stabilization with growth?
See, that it's a very simple question to answer. One, I think inflation has moderated.
Okay.
And housing, as we all know, is a hedge against inflation.
Right.
Real estate tracks inflation.
Yeah.
So there is an inflation rate which it will cover, plus an actual rate of appreciation or real rate of interest, whatever it is.
Right.
So as we all know, the inflation has come down to almost close to 1.16 last month, if I'm not mistaken, the government has announced. So the inflation has moderated.
Right.
And in fact, if the GST kicks in, then maybe it'll moderate even further.
Yes.
So to that extent, the price rise also will moderate a little bit. Two, in housing and real estate, I don't think we should go too much on these very fine details,
Okay.
whether it's 5.2 or 4.7 or 6.3. These is not really shaking that whole industry up.
Right.
These are what I would call fluctuations. They're not corrections.
Okay.
Corrections are when there is a steep correction, 15%, 20% drops.
Okay.
So in some places, if there's been a correction, then we have to look at it. Why has this place really taken a correction?
Right.
Because they are called structural changes.
Right.
These are fluctuations which can fluctuate maybe because of some local micro market issues. It can fluctuate due to inflation. It can fluctuate due to lack of supply in that market. So there was also no demand. So on and so forth.
Right.
So what it shows is the housing price has kept steady.
Yeah.
It has kept pace with the inflation and giving you a real positive rate of appreciation. And if 45 out of 50 has covered, that's 90%.
Yes.
The exception only will prove the rule. But so I would tend to believe that it has been a pretty stable and steady market.
Okay.
Yeah, housing by and large is a fairly steady market in India, and the trajectory is, it's not like the stock market or any other market literally where you'll see a graph going up and down. It's a fairly straightforward, steady incline that you see normally in real estate, in housing prices especially. So to that extent, it's following the trend. Yes, maybe the angle is slightly less steep right now with inflation coming down and
Right.
things like that. But it's overall, I think it's sticking to what one expects to see from the housing residex. It was nothing too shocking that it threw up,
Okay. The understanding is in a growing market, in a growing economy, prices will keep rising. So when there is stabilization, say, okay, we're just looking at this quarter, this half of the year, but say it continues for the next couple of quarters, what could that possibly indicate?
It indicates a good market, in fact, because see, when markets are spiking up a lot, it's actually going to become volatile and
Okay.
risk is higher.
Okay.
I would rather have a moderately growing market,
Right.
which gives you a more longer term growth prospect. It's like running the marathon versus a sprint. Nobody wants to sprint. Everybody wants a marathon. So if you see a marathon runner, he keeps a very steady pace.
Right.
You understand? So I would think that in the long term, it's a secular trend
Yeah.
to be more stable, to be more linear. So
Right.
that's actually a good sign. It's not a bad sign to be stable and growing.
Okay.
You understand?
All right.
So I wouldn't like to see spikes, because spikes, if they come, that means there has been a obvious economic imbalance of demand and supply.
Right.
The demand has risen and supply is not there, so that's why there's a spike.
Right.
Or the supply has risen and the demand is not there, that's why there's a dip.
It's slow.
So that's volatility. So why would anybody want volatility? Fluctuations are okay, but nobody likes volatility.
Right. We've seen in some cities like Howrah and Kochi, the price has gone down. Now, like you mentioned, maybe this is just temporary, maybe it's just, some changes in the micro market. But if, say, this were to continue, whether in this city or else, what could that indicate?
That indicates then there's a structural change. If the price, as I said, if there's been a correction, that means there's been a structural change in that city.
Right.
Either the demand is slipping or the supply has increased for some reason. So there's a structural change.
Right.
Like when Hyderabad, quite some years back, actually said that there is no FAR. It freed up FAR.
Oh.
Based on the width of the road, you could use as much.
Wow.
So for some time, the prices went through a structural change.
Right.
You understand? So those are then structural changes because somebody has tinkered with policies or, some sort of a law or regulation in place. So then we will have to look into it. But if it is just 1 or 2 quarters, I don't think we should really cry wolf.
Right.
So let's wait for a few quarters. If you see that Howrah is really dipping, then we'll look into it to see why is it been dipping.
Right.
What is the problem? You
Yeah,
understand?
the trend needs to continue for a little longer. It's like people were getting a little concerned that, August in Mumbai this year was not as good as August 2024 in Mumbai.
Right.
But that per se is not as telling as one thinks it is.
Absolutely.
It's
It can be as silly as there were more rainy days in August and people didn't go out.
this year as much as they did last year. That's
But
all.
also, we're just getting into our festive season where more supply will come into the market. There'll be more launches,
Correct.
So it could also be that we might see
That
an
people
uptick.
were just holding back
Yeah.
and waiting to see what's
Yeah.
going to happen in the next few months. Yes, could be as well, because you know that the festive season is coming. There are going to be more offers on the table, more of a push being made, both from builders as well as from the housing finance companies.
Right.
So if someone is in the market, they might have just held themselves back a little by a few months to check that out and make the most of that.
And-
but that will then again reflect towards the end of the year, the numbers will correct themselves,
Yeah.
if that is the case.
And if I were to hazard a guess about Howrah,
Yeah.
a good guess would be that Howrah was an industrial town
Right.
of Calcutta. All the industries were in Howrah.
Yeah.
So, but the growth in Howrah is coming from Salt Lake to the new town,
Right.
So it's growing in a slightly different vector.
Right.
So I don't think people would maybe prefer to come this side rather than Rajaghat, Newtown, Salt Lake, rather than be towards Howrah and
Howrah,
Uttarpara and all that.
Yeah.
So maybe there's a slight shift there.
Yeah.
But as I said, we should not read too much into it till we find for sure it's a structural shift.
Right. Well, Newtown and are also closer to the airport, and so there's better connectivity, better
And
infrastructure.
it's better planned, and it has been better urban planned, because Howrah is a sort of a rejuvenation,
Right.
because it is a brownfield development turning, whereas these are all greenfield.
Well, like you said, brownfield turning greenfield. Could it possibly be that maybe suddenly there's a lot of supply also because there are new projects coming out?
It can be, but as I said, people might hesitate and shift maybe to Newtown rather
Okay.
than be in Howrah, unless he's a very ardent fan of it.
Right.
Because you will have better facilities, better
Right.
planning, better infrastructure, better transport. Whereas when you turn brown to green, it takes time to become that.
Right.
Because everything else which is turning brown to green also has to give him that mall and that hospital and the school and the college and everything.
Understood. Thank you so much for tuning in. Don't forget to like, share and subscribe, and hit the bell icon for regular notifications. If there's something you'd like to hear us talk about, please let us know in the comment section below. Until next time, thank you so much for tuning in.